Hey traders, welcome to our Sunday show. Got an official name for the show, Raghee Report. All right, I love alliteration, so gonna roll with that. Great to see everybody. Hope you've been having a great weekend. It is, of course, a long weekend, but it doesn't mean that we are not preparing for the week ahead, and that's what I like to do on Sunday, and I'll be extending this into Monday. We usually have charts and coffee the Monday of holidays as well, because to me, what better way to celebrate things that I love to do than start the morning doing it? And even though the markets won't be something that I will be engaging actively, I think that preparing for the week, you really can't over prepare. You can over trade, but you cannot over prepare. All right. So as always, we got a lot going on in this post FOMC week. So we've got the FOMC from last week. We've got the bank holiday tomorrow. But take a look at the calendar, and I'm going to grab my drawing tools here. Take a look at this calendar. And it is not without quite a few hot zones. ECB Lagarde, FOMC Bullard. We got some monetary policy meeting minutes out of Australia. Going into Tuesday, we've got existing home sales, FOMC member Meester. Not a quiet week, right, at all. Scrolling into Wednesday, take a look. Here we have, just when we thought we were kind of outside the Powell window, here we have Powell with the Humphrey Hawkins testimony. And that, of course, is 2 days. It's a 2-day testimony. I don't know what they call it now, but it was called Humphrey Hawkins for about 30 years. So I'm going to go with what I remember it being called as a young trader. Unemployment claims, again, day 2, crude oil inventories, all leading up to Friday, which is pretty quiet, but we do have University of Michigan consumer sentiment and new home sales. So we have plenty of opinion about how Powell is going to follow up the interest rate 0.75 of a point hike, and then we go into the end of the month. And so this is where I am looking at, the possibility for some rebalancing month end, quarter end, right here, the last 3 to 8 trading days of the month. If we get that rally, that retracement in those downtrending indices and sectors, I will be looking at those through a bearish, opportunistic approach. If we have a downtrend, a rally is a retracement, and a retracement is sell the rip. And that's definitely where I'll be focusing my attention. So that's kind of laying out what's going on this week. And, I would be remiss if I did not mention that is not all that is going on this week. We'll mention a little bit later, but I do want to remind everybody, if you haven't checked it out already, we have the replay for last week's webinar where I talk about how I transition to day trading this time of year. You can check out the webinar that we did on Thursday, laying out how I've been trading, what I've been using, why time and volatility has been such a major component. What are HPMRs, all that good stuff. And then we had a lot of questions about HPMRs. How are you trading? Can we see a little bit more insight into, what you're doing? So we're going to have a follow-up Wednesday. It is not going to be a typical webinar number 2. What it's going to be is a look at my trades between basically, the webinar last week to Wednesday of this week. It's going to be a very interactive Q&A format. So we're not talking just slide presentations. This is going to be a very interactive presentation between, you and I, and looking at how those HPMRs have been making an absolute needle moving difference for my trading. So that's coming up this Wednesday at 8 p.m. And I believe you can register for that over at, I'm trying to think of what that link is. I think it's Answer. simplertrading.com/answer, because this is going to be very much a Q&A driven, dissecting some of the recent trades event. There it is. June 22nd, 8 p.m. Eastern. All right. So, gang, of course, as always, the show is about your questions and an outlook for the week. So let's jump into the chart, start talking about what we have coming up. And mostly, again, remembering that we have a downtrend. We are quite bearish about where this market is heading. We need a rip. We need a rally that'll give us another setup to take advantage of a short the rip. And there are fewer and fewer and fewer uptrends in this market because oil, natty gas, XLE, XOP, OIH, FCG, these have all been shaken up pretty dramatically. So we are in that rebuilding process of, okay, what's the next set of opportunities? And it's not just a matter of the trends on the daily, but it's also really, and I talked about this on the video on Thursday, short-term time frame day trading, daily time frame swing and trend following, and weekly time frame positioning in our portfolios. So if you're not finding clarity, what right now I think is working best is the extremes on the time frame, going very long term, weekly, thinking about what type of positions are hitting your wish list for your portfolio, and going very short term, staying nimble, focusing on one or multiple of the 2-hour windows. There's 4 of them every day that I look at. Well, almost every day, because Sunday, of course, we just have one of the windows. And Friday, one of the windows is closed. But looking at day trading, one of the 4 or more windows of day trading opportunity, day trading participation, every time we can find the market has traveled to one of our time and volatility edges. So really stoked for that Wednesday webinar. We've never done something like this before, and I think it's going to be a really great, quick-paced, informational session. So really looking forward to that. It's really going to be a precursor to the class. I mean, that's what I'm probably most excited about. Okay, so let's get to it. Coop asks, what do I think of long puts in BA? What do I think about long puts in Boeing? All right, let's take a look. So if I'm going to get long puts, I need 2 things. 1, I need a downtrend, check. 2, I need a correction, check. So the only thing that I don't know, Coop, the only thing that I, at the moment, need to go through the process of confirming is that when I take a look at the IYZ, when I take a look at the DIA, are the stocks that are trading similarly to Boeing moving in maybe a better downtrend, maybe a steadier red, maybe in a way that I would say has better downward relative performance to Boeing. But on its own, just face value, yes, I would look for a short the rip opportunity, getting long puts as we rally into the wave, and even take a look at this Darvis at about 142.30. Coop, I'd keep an eye on that as well. All right. Next question. Hey there, Nick. How can I avoid large losses in my positions from 4 a.m. market-wide dumps that we had on Thursday? Well, Nick, I don't know that that's a regular occurrence, right? I mean, it's clearly something that can happen. 4 a.m. Eastern, by the way, is when we have the close of the Asian session. And there are a number of different times that we'll see oftentimes the opening or the closing of different financial centers create volatility. So I wouldn't put on the list 4 a.m. is some kind of market-wide dump. I mean, we really didn't have one on, take a look. This is the 17th, Nick. So we didn't have one at all on the 17th. The dump came at about 10, to use your lingo there. We didn't roll over and see that sell-off till then. All right, let's go to the day before that. Take a look at 4 a.m. here. We were already selling off, and come 4 a.m., things sort of flattened out. So I guess, Nick, I would say, and presuming that's Eastern, I just presume that, unless told otherwise. So again, I would not focus on the time, because the market behavior is not always going to be that set, where 8 p.m. Eastern at the beginning of the Asian session, wide participation means one thing, or that 3 a.m. with London means another, or that 4 a.m. or 10 a.m. US means another. But we know that there could be a catalyst for movement. I wouldn't focus on one. Let's think about that 8 p.m., right? So here we're going to the 8 p.m. Shortly after, we saw the rollover. So I think that 4 a.m. would be one of multiple times that I'll say, hey, these are catalysts, not from hot zones, but from market participation, closing and opening of sessions that could create that shift of opinion. So I think avoiding losses is just knowing first when that volatility could kick up. And then the next part of that is, can I do anything about it? If I have equity options, ETF options, it's not a darn thing I can do about a 4 a.m. move, right? But futures, different conversation. And the class on Saturday, I can't believe it's just 6 days away. The class on Saturday is going to cover both options, day trading options, and stocks and ETFs, as well as futures and even futures options. So I think knowing those specific times, 4 a.m. is definitely one of them. So cool question, Nick. All right, next up is thanks to y'all for putting the work into Thursday night. Looks like fun. Making money is fun. Alan, it's not just making money right now. I think it's trying to avoid the frustration of markets that are as choppy as it is on the daily, as weak as they are longer term, and focusing on where our edge is intraday. And this process of the HPMRs is something that I've been wanting to expand on for years. This was part of my 2010 book where I started first introducing in that book the fact that us retail traders have access to historical volatility data. And then what I did from that point forward, and that's 12 years ago, tweaking and fine tuning this process. I'm really proud to say of all the different indicators that I've created throughout my career, this has got to be one of my favorites because there's just nothing else that does this. And getting to a point where we can keep the data of the volatility ranges updated in such a way that it's the most accurate that it can be is what's so exciting. So it is fun, Alan, and it's definitely a process that I've been wanting to. First it started in Forex, then it came over into futures and equities and ETFs and even crypto. So I'm super excited to just continue to expand these packs. And big shout out to the Lorna bot for being a big part of getting this process expandable, applicable to TradingView and Thinkorswim. So yeah, I am super excited. I'm also super tired because Trish and I have been working on getting this slide deck for the webinar on Wednesday, which is going to be unlike webinars that we typically do, highly interactive, not just slide after slide, but talking about the way the markets are moving now and current trades, because after all, that's what matters. And then especially when it comes to day trading, and then putting these class slides together. And the cool thing is, right now, last time I checked, I had about 18 or 20 charts where we're just going to go step by step through the checklist of how to use this stuff. So I'm stoked. Yeah, I'm absolutely stoked. All right, next up, I am Groot. The line of the sand is the line of the sand, not as important when I have other whys. Okay, so line of the sand meaning levels on the daily that I am. Now, there's a couple of different things I am Groot that I call line in the sands. One of them is the close. I mean, there are multiple ways to glean different types of sentiment shifts. Is it not as important to have other whys? I think probably the most challenging thing I am Groot is when we are above the line of the sand and the only thing we have to act on is a short. This happened last week. And when we're below the line of the sand and the only thing we have to act on is a buy, as long as we can contain risk, and as long as we're not fighting a trend intraday, which, by the way, the red and green on the screen here is only as useful as the red and green in terms of structure down in here, and that's the multi, which, by the way, is included with the packages for all three classes. So I think that if we have a neutral environment and we're on the, I don't want to say wrong side, but less useful side of the line in the sand, It doesn't mean there's no trade, but it can then mean we might be in a situation where it's not as ideally clear that there's bullish or bearish sentiment. So the follow through is usually going to be more affected than just the validity of the trade. Sometimes you have a trade where you cannot check all the boxes. I'll be giving you all the boxes in the class. In fact, the way that we're structuring the class right now, chart, and then this box was checked, this box is checked, this, going through chart after chart with that kind of repetition, which is really going to drive home the visual confidence to, oh, I see, that's the setup because this, and this happened, right? So the idea then beyond that is what happens if one of those boxes or two of those boxes can't be checked? In this idea of building it, these, like, as you mentioned, I want to have multiple whys. I want to stack all sorts of reasons to be in the trade. So when we can't check all the whys, there are one or two of those check boxes that, if they cannot be checked, nullifies the trade. Others, if they can't be checked, would then be more influential on either being more conservative about the entry or smaller in the position size. So some are deal breakers. Others are more consideration about, well, this isn't ideal, so let's reduce our risk by either getting in more conservatively or with smaller position size. So I hope that makes sense. It's really just looking at the different boxes that we can check and knowing which ones are essentially non-negotiable. All right. Okay. So next, and thank you. Very cool question. All right. Next up is, there we go. Would I put 6B and 6J? Let's take a look. Would I put 6B and, be nice if I typed it in right. Would I put 6B and 6J on the watch list in this environment? Yes. Even though the Bank of England and the European Central Bank are clearly both hawkish, now it's a question of, are they more hawkish than the U.S. Central Bank? And the answer right now is negative. So I would see the U.S. Central Bank as still being hawkish, more hawkish than any other central bank. And therefore, then I would see the U.S. dollar as stronger than the 6E, 6J, 6B. And then one of the easiest ways to play that in its entirety at this point would be UUP. So when traders talk about the US dollar index, what most traders are not specific about, frankly, because they usually don't know, is that the US dollar index is a basket. The US dollar index is a basket of mostly euro, secondarily yen, and then the pound sterling. You really want all three of those currencies, euro, yen, pound, to be weaker than the US dollar for there to be useful clarity in dollar index futures or UUP. And therefore, would I put it on there? Yes. And wonderful question, right? What I would focus on is those individual currencies, just as you've said, add the 6E to it. And then I would also consider DX futures or UUP ETF to the long side, which is something we've done for quite some time in the Sector Secrets Mastery. I love trading currencies. And if you notice, in terms of futures currencies, we are looking at the HPMRs in this time as well, which on Sundays, they can be a little wonky, as you can tell. But I absolutely, look at this structure. I absolutely love using these zones for intraday as well. All right, moving on. All right. Next up, hey there, Prabish. Since commodities and grains broke the trend and are not clean anymore, agreed. Yes, 100% agreed. Let's open up that chart, the daily time frame. Are we back to looking for double green or double red on the subset of ETFs? So not just the NASDAQ and the S&P, Prabish, but XLF, XLV, XLK, XLP, XLE, XLI. I want, all those heavily weighted sectors within the indices. Yes. And most of those are heading lower. So it's going to be double red. Even energies have rolled over out of the previous uptrend. So now what we need to do is we need to focus on the fact that the trend that we are working with is either chop with the uptrend that came before it, that's most of your energy stocks, or the downtrend in all the indices and the sectors that are heavily weighted within those indices. So thanks for the question. How can I find the Holy Grail video for getting up to speed in the Sector Secrets Mastery? Gary, in the Sector Secrets Mastery alert section, you'll find it in any of the notes we do on Wednesdays. You'll find it. Anytime you're in the room, ask Lorna or I, and we'll give you the link. There's two. We actually have 2 updates. We have the base foundation for position sizing and risk management, and then we have the advanced conversation. So just give us a holler Monday through Friday in the room, and we'll be sure to give you the links. All right. Axel, I love the currency questions. Any comments on yen and euro? So yes, both of those are, as far as I'm concerned, both of those are focusing on strength in the US dollar and shorting the other currency. Now, again, the Bank of England is far more established, a hawkish central bank. And the ECB is just now getting to that level of clarity about their hawkishness. First, it was, we're not going to be in negative deposit rates by, say, September, Q3 of this year. And we're looking at half-point hike, maybe quarter-point hike from the European Central Bank. As that's being processed, that's probably new news as opposed to the Bank of England hiking rates. I believe they were hiking before really any of the other G7 central banks. So we have a little bit more volatility likely to go in the 6E. 6J is clear. So short the rip. I mean, that's what I'm looking for. If you're looking at the sixes, the futures, short the rip. FXY, short the rip. FXE, short the rip. Just be aware that if you're going to wander into the currency ETFs, the option chain liquidity can be spotty. Okay. All right. Great question. Thanks for the currency questions. Loved it. Love it. Remember, currencies are from a central bank and the gears that are moving there. Very, very good places to look. But remember, we can day trade those currencies as well. All right. Next up. Hey there, Ambus. Appreciate these extra Sunday live videos. My pleasure. We've been doing the Sunday Note Show, I guess, for a few months now. So I'm enjoying doing it. It's great to be able to prepare for the week in the show format. My Sector Secrets Mastery folks, heads up for the Raghee report. I'll get that report out to you all likely tomorrow. I'm enjoying a little bit of phoning it in on Sunday, just a little bit. Trish and I have been working on the class slides. They're just about where I want them to be. Great examples. Really fine-tune that checklist. That's one thing that a lot of folks ask me, Rag, can we have a checklist for the trades? And the cool thing is with the automation that we've got to this point, it's about as close as I've ever got to check. And like I said, we'll talk about checks that we're allowed to not have in place versus the ones that if they're not there, invalidate the trade. So really stoked about that. And then, really teaching people about volatility and the way in which it is always changing, updating, and how that affects the way in which the sheer frequency that is needed of the HPMRs are going to keep those as accurate as they can possibly be. So really stoked about Wednesday. So I appreciate that. I'll tell you what. When it comes to retail traders, I don't have any kind of worship complex for hedge funds or all these kind of professional traders. Clearly not anybody on television, really. I respect the person like you, like me. We're trading and setting up and investing from home, our capital. We're thinking about our family and our kids and our, whoever it is that we're lucky enough to, try to help take care of. Could be our parents. Our capital to try to grow it. It's what my mother did. My mother was widowed at 40, and I watched. I was 15, and I watched up close what my mother was able to do by understanding the markets and finding a process to invest. She was an investor with a little bit of market timing. And then I ran with that and became a trader. So yeah, I appreciate the kind words, but this is what jazzes me up. This is what the real juice is for me. Because I can sit around at home and just trade, but it's lonely, and it's so much better to do things with a community. There's a saying: if you want to go somewhere fast, go alone. But if you want to go far, right, go with others. And I definitely believe in the latter. So I appreciate that. I appreciate that. All right. Is there a charts and coffee tomorrow on Charles? Yes, I've already set it up. I've scheduled it. You can go hit the reminder bell, I believe it is, on the video right back at the Simpler Trading YouTube channel. So yes. Daniel, if you want to learn about the class, no, my friend, it will not be free. We don't do free classes. I do a lot of extra content here at Simpler Trading for our shows, and I have a lot of bonus content for the Mastery members. But no, my friend, it will not be. Classes are not free. They take a lot of time to prepare, take a lot of effort, and I'm always appreciative of people who are looking to invest in my classes and learn. But it's definitely something you can do. It's an a la carte. It's an a la carte feature of what I do. Let's see. I appreciate that. No, thank you, gang. I really do appreciate that. What's the best class for a brand new trader or the best mastery? Martha, I'll tell you what, it depends on what you want to do. We have a lot of different masteries from a lot of different traders here. I only know what I do, Martha. I can only tell you what I do. And in my mastery, we are going to be moving to sessions of at least 1 hour a day, every day. So one of the schedules I was looking at for potentially, what we're going to be doing after the day trading class, one of the schedules I was looking at, because it's going to become a 5-day a week, but not 9:30 to 4. But I want to spend at least about an hour with you all, at least, because on Wednesdays we have the live Q&A, which is just over 90 minutes. On Friday, we have a 90-minute Ask Me Anything session. And then, we're going to start to expand that schedule for my mastery. So if you're looking for something with a little bit more community and an open chat room to chat with other traders about the things that I teach and about our trades, come check out what we're doing at the Sector Secrets Mastery. But as far as what's best for you, check out all our different traders, Martha, and find a room that is suited for you. If you're looking at accounts that are small, I would think scalable, Martha. I always think about scalability, right? So we do teach a process that's good for a high 4-figure account, mid to high 4-figure account, 5-figure account, 6-figure account, 7. I think we have traders across all those different strata. In other words, we have really small traders, we have really large traders, but we're all trading the same stuff because the focus is on scalability. Some of our traders are trading 2 contracts. Others are trading 22 contracts. I might be in 50 contracts, right? But because of liquidity and because of cost, we can scale in this way. And that's what I teach, a scalable mindset. So Martha, that's my advice, obviously. Okay, so next up is, let's see here. There's a new class. Hey there, Cessna Pilot. Let's see. I heard there's a new class scheduled. Does a new class have sufficient content to make it purchase again? So if you were to, great question. I've been getting this a lot. So I don't want the office to get mad at me, but look, if you thought the class that you were getting was the one that I'm going to do, reach out to them, see what they can do for you. Because what I realize is, some of my older classes are still available and they're very powerful. Okay. Call, hey, Cessna Pilot, one of two things. Ask them if you can get a better rate on the class that I have coming up, although what we're doing with this class is ridiculous. You're getting anywhere from $100 to $300 to $1,200 worth of subscription in the class. So with the new class, the emphasis is really time and volatility, and we're having a prolonged period of time where you have subscription to our brand new version of the HPMRs for TradingView and for Thinkorswim. But if you just call customer service, they'll swap it out for you. They'll swap it out for you. Tell them I sent you. They'll swap it out for you. But as far as all three of these, some of you might be saying, hey, Ron, this is the third class I'm taking with you. No worries. If you remember class 1 and 2, they were nothing alike. One was really focused on volume and VWAPs and volume profile, which is very important. The second one was time and using the daily time frame. We started introducing hourly price movement ranges. And now that we've expanded the packs, it's options day trading, it's futures day trading, time, volatility, and really deep diving the HPMRs. And you know, one of the, I got an email over the weekend and I appreciate it. So shout out to, I think that 3 or 4 of you that emailed me, said, Rog, is this correct? If we take the elite, we're basically getting either the class or a year of the HPMRs for free. Kind of, it's sort of buy one, get one, because the HPMR for the year is going to be about $1,200 and the class is about $1,200. So yeah, that elite package is insane. And that's something that I got to give a huge shout out to Trish. She made happen. Look, if they're going to spend 4 days live trading with you and they're going to spend $1,200, 12, whatever it is, 97 to learn, we want to give them such crazy value, especially right now with what's happening in the market. And that's exactly what we did. So yeah, for those that, was that an error? Is that true? No, it's what we're doing. And I think it's the right thing to do. You know, put that indicator in everyone's hands for the year, especially if you're taking that elite package is what I'm referring to. All right. So yeah, my sister, give them a call. Give them a call and they'll hook you up. Jay, I do not know. You know, all I can say is Raghee said, check, I'm a Sector Secrets member. What can I get? But Jay, this is what I can tell you, right? As a Sector Secrets member, we're going to be expanding. We're never going to deviate from the heart of what I do, which is sector-driven, trend-following swing trades, right? Swing trades. So I don't know if they're doing discounts, my friend. I really don't know. But here's what I know I am doing for Sector Secrets Mastery members, right? So as we get out of the class, so that'll be basically the first week of July, I'm going to be expanding the number of sessions that I'm with you all in the room, so we can start to include day trading with me in the Sector Secrets Mastery room. And then that's going to be on top of what the core of Sector Secrets is, which is daily timeframes and trends. But until we get a correction of the downtrends, look at these downtrends, gang. Let me just mention this. The downtrends, we need a rip. And if we can get a rebalancing rally out of the end of this quarter and month, that would be really the gift that keeps on giving for a short period of time. We need some volatility, whether that be a bounce in gold or a bounce in the 10-year or a bounce in the 30-year or a bounce in the euro or a bounce in the pound or a bounce in the XLK or XLC or XLV, right? That end of month rebalancing bounce, if cash gets put to work, which is what I've been telling my Sector Secrets members. You know this if you're in the room. If we did not get the volatility with Kapow, which we did not get enough of, options expiration, I said it's going to just be the spin cycle on the watch machine, which is pretty much was. The next window is going to be that end of month. So we're being really patient with the daily. It's just not there yet. Some of the weekly levels, we're starting to close in on some of the things that I teach you all in the macro market deep dive sessions that we have once a week, and then also in our quarterly portfolio positioning conversations. So there's your longer term approach. We have the core, which is that daily time frame, which we're waiting on some moves. And until we get to one of those, you know, either positioning with our portfolios, some of those alerts and setups going out, or we get that rip for the daily, I'm just shortening the time frame in day trading. So if we can master different time frames in time horizons, we always have something in our portfolio, or something in our pipeline, I should say. We always have some kind of opportunity in the pipeline. So I don't know what the office can do, but that's what I'll be doing as we come out of the day trading class, which is we are really expanding the sessions. And then here's what's cool. Whatever session suits you, whatever type of trading suits you, now you can just kind of pick and choose those sessions that you want to attend. And of course, we send out alerts and everything, but that's what I can tell you. Am I still using V-Score and HPMR together? LM fan, of course, yes. But another thing that we've been focusing on is slow stochastic. So if you've got the V-Score and you've got my slow stow settings and you've got the updated HPMRs, gang, if you have an HPMR from me that's older than 2 or 3 weeks, please know it's no longer accurate, because volatility contracts and expands. And when we are day trading, the tolerances are tight, right? The tolerances are very tight. So if you're talking about an HPMR that you got from me in 2021, it's definitely no longer valid. If you have an HPMR from May, it's no longer valid, because the volatility is constantly shifting. And that's what we're always updating. These things are going to be updated likely 2, sometimes 3 times a month. That's the nature of these historical volatility ranges. All right. So is the HPMR included in this class? Depending on which one you take, yes. V-Score, no. Right? I don't know what it means, LM, but the HPMR is included. 1 month with the first level, 3 months with the second, and a year with the third, with the elite. Was it basic and I can't remember the names of the type of the things, but of the different packages. I've got my head in the slides, I don't remember, but if you check out simplertrading.com/price, you can check out the replay. And then I think the class is simplertrading.com/guide. simplertrading.com/guide. You can get all the details for the class. All right. Do I use Bookmap? Glenn, I do from time to time. But it's something that's used as an indicator, which is to say, if I'm looking to see where size might be sitting, and I'm not seeing it with, say, volume profile on TradingView, or I'm not seeing it with my zones on my charts, then yeah, it's definitely something that is useful. But I don't teach it. I've done some webinars for them because I think it's cool software, but it is not necessary, and I don't use it on a regular basis, mainly because I don't want traders to feel that they have to go invest in something else to do what I do. But all of us are traders. We love new ways to represent what's happening at a price action level. So if that's something you want to pursue, check out one of my webinars, or next time you're in the room, I'll see if I can't find the replay. And then you can check out the webinars that I've done to see if it's going to be a needle mover for you. I do like it, but I don't think it's necessary. All right. So then let's see what else we have here. Thanks, bot. The basic class has the HPMR, grab, Darvis, propulsion. Basically, if you caught my webinar, and actually on this chart here, yeah, everything that's on this chart, flags, propulsion, grab, wave, Darvis 3.0, slow stow, multi-trend. Yeah, pretty much everything on this screen is what's included. So if you want to recreate what you're looking at on my screens, you got it. And by the way, the HPMR is an intraday tool, but the rest of them I apply to end of day as well. So it's not just a day trading toolkit. It's what I put on all my charts. So if you take the class, you're going to have the same tools that you need to do all kinds of trading that I do. The only thing that you won't have is the V-Score, the VWAP. We're just not focusing on that particular tool for this class. All right. What else do we have here question-wise? Hey there, Joe. Do I trade leverage inverse ETFs on a regular basis? I personally do not. I do not like to trade them. However, Joe, if you're trading QQQ, every variation of NASDAQ, right? We're going to look at the NQ futures. Once you know what NQ futures are doing, if you want to go triple Qs or the inverse Qs or leverage Qs or any kind of variation of the NASDAQ 100, you can. I don't believe we have to set those separate ETFs up. If we're looking at the S&P and you want to trade the SPX, look at the S&P. Because remember, a lot of these ETFs and a lot of these other instruments do not trade with the number of hours and the global volume participation that the futures do, right? They just don't. I mean, for example, if I take a look at, let's go to the intraday charts right now. We're open. The futures are open right now. They're going to be very illiquid come tomorrow because we have a bank holiday in the US, but there's no bank holiday in the Asian sessions. Auckland, Sydney, Tokyo, Hong Kong, Singapore, rolling into Paris, Frankfurt, rolling into London. There's activity, there's opinion, there's volume, right? So, being a Forex trader for over 20 years now, you get a funny view as a trader on US holidays because you realize that not all of the countries are sharing, whatever we're celebrating in the US. They're doing what they would do on any other trading day. And there's still volume and opinion that's associated with that. So I believe what this ES is going to tell us about what's happening in SPY, SPX, right, is far more complete. I hope that makes sense. It's far more complete. All right. All right. Let's grab one more question. I just realized we're going way over. By the way, gang, we're going to have a session tomorrow. I'll be doing Charts and Coffee tomorrow at 9 a.m. So if you usually join me for Charts and Coffee Monday through Friday, we will be doing Charts and Coffee tomorrow at 9. All right. What are my thoughts on the pullback in Natty Gas? Wowza. So that export terminal, the Freeport export terminal volatility has been bonkers because the narrative continues to be updated. First, it was a 21-day closure. Then it was 90 days to a partial opening. And it's very messy right now. It's extremely messy right now. And that means that if that narrative is messy, the supply-demand narrative, mostly this supply that's sitting in the U.S. narrative, is going to continue to probably put some pressure on Natty, which is fine because let me show you something. And by the way, Darvis 3.0 comes to the class. Even if you're not a day trader, the package that it's coming with is incredible. And it's a lot of the tools that are on my daily time frame. Take a look at the sector slow. We are getting down to a zone of oversold support. So if we are going to find ourselves leveling off and then re-entering the range, yeah, those pieces are starting to fall into place, Glenn. So I'll be keeping an eye on it. It's just not a trend following by the dip any longer. It's a respect the trend that was. Where is the oversold support conversation now? All right, gang. Thanks as always for joining us for the Sunday show, which I am just simply now calling the Raghee Report because, well, I'm Raghee and this is my report. All right, gang. Thank you as always for joining our sessions, whether it's the Sunday sessions, where we'll take a look at the market to start the week, or Charts and Coffee, where and I actually have some coffee I'm rocking. Yes, doing some coffee at 6:44 p.m. Eastern. Whether it's Charts and Coffee Monday through Friday, our pre-market show. Thank you as always for your time and your questions and for loving trading and for being a part of the community. I appreciate you so much. And I will see you all tomorrow. And then if you already haven't, head on over to simpletrading.com/answer. This particular presentation is going to be unlike the other webinars that you typically see where it's kind of a presentation. It's going to be Charts and Coffee or Sunday Notes Live on steroids, right? PEDs. We're going to talk about recent trades, pick them apart, show you what I was looking at, and then take your questions about the indicators and about the upcoming class. It really is going to be a great preparation. So for those of you that have already signed up for the class, awesome. It's really going to be a great preparation for Saturday. And for those of you that are on the fence, Rock, I'm really not sure I need this. I'm really not sure if this is right for me. Ask me. I'll be absolutely blunt. There are a few people that emailed me and said, Rog, I really don't like short-term time frames. I'm kind of uncomfortable. I said, look, if you want to educate yourself about them, check out the class. Start with the basic level, right? You don't have to dive in with both feet. But if you really know you don't want to be a day trader, I was very frank with some other folks that said, I'm really not available at certain hours of the day. I don't want to push anybody into day trading. So educate yourself either in the class or even in the Wednesday session. See if it's right for you. I don't want you trading something and a strategy that isn't going to lend itself well to your time availability or your comfort level, right? But it's easy to make a comfort level more comfortable with education. So hopefully we can get you on the right path. And as always, thanks so much for your time, and I'll see you tomorrow morning at 9. Be good to each other, gang.